Good morning to everyone, Central Time Zone. Good morning and good afternoon, everybody on the East Coast. And then anybody that's Pacific, good morning to you too. Good morning to you. Anybody joining us internationally, welcome to Trading Truth Tuesday. I'm so excited to be with you guys here. And I got a little feedback. Hold on one second. Yep, getting a little feedback. Give me one second. We're gonna get this feedback straight. I think I got it. Hold on. All right. Yep, I think I got it. I think I got it. I cut the feedback. Perfect. We got it. We're straight now. So let's make sure. I think I cleared it all. I'm still getting a little feedback. Let me know in the comments if you guys are getting feedback as well. I know that I am, and we can't have that. I'm gonna also grab my earbuds just in case that's part the problem. I'm just double checking a couple things on my end, and I'm checking these comments as well to to make sure. Just checking a couple things, make sure it's all good on my end. Because what we're not gonna do is let that disrupt what we got going, what I got planned for you all today. I think I may have it now. For any of you guys joining me live, go ahead and drop a one in the comment if you're good on your end. No feedback coming through. Mic sounds nice, all that good stuff. And we're going to jump into what we are going to cover today on this edition of Trading Truth Tuesday. All right, so I always like to get started with a little bit of audience participation. And part of the audience participation for this week, I want you to drop your favorite symbol. I want you to drop your favorite symbol in the comments. It doesn't have to be your all-time favorite, but I want you to drop your favorite symbol in the comments right now. Your favorite stock right now, your favorite asset class. It could be cryptocurrency, stocks, forex, whatever it is. Drop your favorite stock or asset in the comments right now. I'm gonna drop mine in the comments right now. I don't think it's gonna come as a surprise to anyone in the accelerator community, the discipline trading team accelerator community, or on the trading team. I don't think anybody's going to be surprised. I actually think they might be able to guess in the comments what mine is as well. So I want to see what your favorite symbol is right now in the market. Like I said, I'm going to drop mine. I don't think it's going to be a surprise to anyone, but I just dropped mine in the comments. And yeah, that's my favorite symbol. Um, and I want to see which one yours is. So welcome to Trading to Truth Tuesday. If you're watching this on the replay, go ahead and drop a hashtag rewatch crew. I data mine all the comments, whether it's here on YouTube or in my trading community. I'm always looking at the comments. I'm always wanting to know what you guys are thinking, what you guys are vibing with as far as what I'm saying. If you've experienced anything that I'm talking about on Trading Tuesday, if you have questions, if you have symbols, whatever that might be sure to drop them in the comments. All right. So let's get into it. My name is Jamila for those of you that are new here. And if you haven't already hit that like button, go ahead and hit the like button. Make sure that that we get this Trading Truth Tuesday out to everyone. We're trying to grow to 100 subscribers. We just started this channel about 30 days ago. We're trying to grow to 100 subscribers by the end of this month. So it's the 22nd. We got about a week, and I'm counting on you to help me get this channel to 100 subscribers. So share this video with someone and make sure you're subscribed too. So I got Broderick in the comments. He put Apple and Amazon are his favorites. Now, what I will tell you, and I'm going to get into it right now. This is a little off subject. Bear with me. So what I will tell you that I've seen, and the stock that I'm going to cover at the end, so make sure you stick around to the end. The topic that we're going to cover, I have a specific symbol that I'm going to chart it with you at the end, and I'm going to show you how buying high and selling low impacted so many people that they missed the ride, the second or third ride for this particular symbol. Now, Apple and Amazon, I feel like, especially Apple, right? Part of the Magnificent Seven is not getting great press right now, right? I don't think anybody would argue the point that Apple is not a favorite in the market right now. Now, Nvidia, other stocks, in the Mag 7, I heard someone call it the Fab 4. Earlier today, I was listening to a podcast and they called it's really about this Fab 4 that's out in front on AI, talking about Microsoft, talking about Nvidia and a couple other names. But Apple is getting beat up in the press and they've got earnings coming. And it's at a critical support level, a very critical support level that has been ranging now. I believe, I'm going to check my chart real quick and tell you, I think it's been ranging for, and I'm just talking about the most recent, the last 3 months. It's been sitting in an ascending triangle and it's right at the top of that ascending triangle. And they've got earnings on the 31st, so next week, right? So it accelerated with the market in 2024, pulled back in 2025, but has not recovered the same way other stocks have in the Magnificent Seven, like the Nvidias and so on, and Microsoft specifically, who is, I mean, absolutely on a tear. And don't get me wrong, Microsoft is one of my favorite symbols also, but I just said pick one and drop it in the comments. So the reason why I paused on this with Broderick dropping that in the comments, those are his favorite too right now, is because the stocks that no one's talking about or that people are trashing are oftentimes the ones we need to look at. So I love that Broderick put Apple and Amazon in the comments because that is where one of which, especially Apple, that's getting beat up right now. It's on sale if they report earnings and things go well and the market digests what they're talking about and there's any new developments with anything that they're doing on AI, all of a sudden everybody's going to pile on. And let me say everybody, meaning retail investors, not necessarily institutional investors. And I personally believe that the institutional investors may already be in place and ready for earnings. So, love that that's one of your favorites. Amazon is not quite back to its all time high as well. So, there's still opportunity there. So, love that. And I think it's perfect the perfect segue, the perfect segue to what we're going to talk about, right? We got a big week in tech earnings this week and next week. And I want to know outside, we mentioned Apple, Amazon, Nvidia. Amazon is also one that I'm really focused on from an earnings standpoint, simply because oftentimes you can get a very good gauge of what consumer spending has been like, regardless of what they're saying about inflation, how much discretionary income's out there, jobs, what you can really understand what's happening with consumer spending, which is the key, oftentimes the key that runs everything in the market, including your semiconductors like Nvidia. Right? If people don't want to consume products, Nvidia doesn't need to place the chips. Now that doesn't include some of the corporate stuff that they do, but it does affect them upstream. All right. So here's a question I have for everyone as we get into today's topic. And these three stocks that we've already mentioned, and if you haven't already dropped yours in the comments, be sure to drop them. Here's the question I have for you. And this may have happened to you when you first started trading, first started investing, or it could be happening to you right now. Why do you always seem to buy at the top of the market and sell at the bottom? Why do you think that is? Why does every stock you buy immediately feels like it just drops, or every trade you enter, it almost feels like it's timed perfectly to drop? Why does it always feel like that? Or every time you sell a stock, it immediately skyrockets or goes to the moon, as a lot of people say. Why does it always feel like that? And I want you to know it's not bad luck. And it's not market manipulation, right? Because I promise you, I love you. I believe every individual on this earth was created with a purpose and is greatness. However, no one's thinking about your trade. Now, they might be thinking about the Warren Buffett trade, but they're not thinking about your trade, at least not right now. I know you're going to grow billions in your account. I believe that for you, but nobody's thinking about your trade. So it's not the market manipulating you, it's psychology. And today I'm going to show you exactly how your brain, including mine, could be sabotaging your trading account. If you're watching this live with me or you're watching on the rewatch crew, drop a hashtag rewatch crew and then crush that like button so this gets out to everyone. And then I want you to drop a D in the comments if you've ever bought a stock because someone else was talking about it. Drop a D. The letter D is in dog in the comments if you've ever bought a stock because someone else was talking about it. Because I know I've done it. So let me go and put mine in the comments because I've done that myself with, no hesitation. I've done it multiple times because someone else was talking about it. Then I want you to drop a D in the comments if you've ever panic sold at the worst possible time. Now, this is in hindsight because you're looking back over time to say, I did this. And I think part of helping you with your trading psychology is just being able to say, I did it and I've done it. I've blown accounts on just these two things. I've blown accounts and I've let things go to zero on a trading standpoint when I should have never been in the trade in the first place. So drop a D in the comments if you've ever done that. And again, I want you to stick around to the end. I got this one ticker symbol that I'm going to cover with you that I think in hindsight, everybody's heard of the name. Everybody knows the ticker symbol. For the most part, I believe just about anybody with a cell phone uses or a smartphone uses this actual ticker symbol or knows someone or someone in their household uses it. And then I'm going to cover one simple rule that instantly breaks you free from this herd mentality of buying high and selling low. All right. Again, if you're new here, be sure to hit the subscribe button because every Tuesday I'm going to reveal psychological traps that the trading industry wants you to fall into. And remember this, they make money when you lose money. And we're going to talk about that a little bit more. So the first trap I want to cover with you today, buying the hype. Why FOMO kills your account. Why FOMO can kill your account. Fear of missing out for those that don't know what that means. This first psychology trap is probably one of the most expensive ones. And I guarantee you, if you haven't fallen into it, you probably will in the future. Even the individuals that I coach one-to-one. So individuals that I coach one-to-one, they go through my entire coaching program. They fall into the trap too. And I almost feel like it's a requirement at this point because no matter what I say, no matter how many results I put up, I could walk them through it. They still got to learn this lesson the hard way. And the reason why is number one, your brain is wired. It's wired to follow the crowd for survival. We weren't put on this earth to be alone. We were designed to be in community. So everybody's heard that phrase, when people start running, you run if you're out and about. That's more than not, that's for your survival. You're not going to watch hundreds of people run if you're at a concert and you just stand there and wait to see what happens. Not in this day and age. And frankly, wouldn't have done it in the 80s or the 90s either. Somebody starts running, I'm running too. That's just all there is to it. And that one thing, if you apply it to trading, is what I like to call and so many other call the herd mentality. But in trading, the herd is usually running toward the cliff, not away from danger, right? There's not any like physical harm other than blowing your account that can happen. You're not going to physically be injured if something goes wrong in the market. Your survival instincts are working against you on the markets. Now, I'm not saying you can kill that instinct. You cannot kill your human nature. And I actually don't want you to because you still need that to survive. And, in reality, not on the markets, not on the charts, but in reality, you need your brain to do these things in order for you to survive. Okay. Number two, media and social media amplify herd mentality. When you see a stock trending on Twitter or CNBC's talking about it, or a coworker mentions it, that's actually not the time to buy. Because at that point, more people, like if it got to work and your coworker that passively invests or doesn't invest at all is now talking about this particular stock, that means it's already, the move has happened. That's when smart money has decided, I'm going to sell this stock to you. You're not getting in early, you're getting in late. The third point in this bucket, in this psychology trap, FOMO creates the worst possible entry points. The worst. Right? Because fear of missing out makes you chase stocks that have already moved 20%, 50%, 100%. Now, I'm not saying you don't buy a stock that's trending. Let me be clear, because the market trends up more than it trends down. So you are going to be buying as the market is trending. But you don't want to buy it based upon what someone else is saying when it's very public now that this thing is running. Because at that point, you're buying at emotional peaks when everyone else is experiencing this euphoric, like it can't go wrong. And that's not investing, that's gambling with terrible odds. And actually, that's oftentimes when most people blow their accounts. So here's the brutal truth. Every time you buy because of the news, hype, social media, the water cooler talk at work, you're buying someone else's exit strategy. Let me say that again. Anytime you buy the news, hype, social media, the water cooler talk, my cousin said this, Jamila said that, you're buying someone else's exit strategy. And notice I put myself in there too, because you cannot buy my strategy and expect that I'm not selling you my exit strategy. You don't know if it's my entry or my exit. How do you know that? You don't know the emotions, the rules, the risk, what I plan to do this, how long I plan to hold it, how long I've been holding it. You have no idea. The smart money sells you at the top and tries to get it from you at the bottom. And it's a crazy, and that can feel like market manipulation, but at the end of the day, it's simply feasting on your emotions. This is part of why I created the 10-minute daily routine so that you can start to develop your own approach to trading the markets. It teaches you how to develop your own reasons for entering trades. And I dropped the link in the comments at the very beginning of this so that you can get access to this. Is a free ebook that walks you through your 10-minute daily routine. And the sooner you get started on building your own routines around the market, the sooner you'll be pulled away from this psychology trap of FOMO. So no more following the crowd. And that's not to say that you won't be with the crowd in some moments, but you're not entering trades with the crowd just because the crowd said so. No more buying the hype. And our disciplined trading team and our accelerator community helps you stay accountable. We had someone drop a chart in the community. I think it was either last night or this morning that I hadn't charted before. Just asking thoughts on it and seeing what support levels. That's the beauty of doing this in community. They didn't say, "Hey, this is the strategy," or "This is how I'm doing it." I just want to know what you guys' levels are. I want to know if this makes sense to buy right now or to trade right now and not get caught up in the hype. That's key. Shout out to Tina in the accelerator community for saying, I'm not trying to buy the hype. I'm trying to trade this with my strategy. I want to know if my support levels match up. I missed one the other day, right? So the link is in the description for that 10-minute daily routine. And I'm going to also put the community. If you want to come join us in the community, I'm going to drop that link in the description as well. If you want to join us in the community, if you're looking for a community, hey, I'm not saying ours is the greatest or the best, but I love how we do things in the accelerator community, and I think you'll enjoy it too. All right, so on the psychology trap number 2, panic selling, why you sell at the bottom of the market. So this is all about panic selling and why you do it at the bottom. So this trap can be just as deadly, and it usually happens right after the first trap. So you buy because you fear missing out on it. Like so many people did with Nvidia. The rug got yanked after a certain point. And now it's back at an all-time high. And the thing about it is, if you bought at those very tops, and I'm going to get you the price on that real quick, just so you know, and you can go back and check this. It ran for so long from 2022 all the way up to, and I'm going to go to the most recent pullback, all the way to 2024, late 2024, and then started the decline with the rest of the market. So it got as high as 152 and then dropped to 86. That's not quite half, but it's super close to half. Now, if you bought in the 130s, in the 140s, you didn't want to hang on to this thing at 83. But now it's at 168. And that's why this one oftentimes follows FOMO. So you buy it while it's running. You in the hundreds buying it 120, 130. That's where your price that you bought it at because you feared missing out on this incredible semiconductor. Price drops on a correction, which it has to correct. Like that's part of the trend. If the market always went up, nobody makes money because everybody would just be a buyer and there would be no sellers. And then no way to buy in if you're not already in. So it has to trend. And then you sell it at 83. You bought it in the hundreds, you sell it at 83. You're giving it to someone that their strategy is to get a more shares traded, whatever they're doing. 80 is a great price. They buy it and it goes to 160 and doubles. Scientists have proven that your brain feels the loss twice as strong as the gain. When you see red in your account, your flight or flight response kicks in. And again, you don't want to get rid of this. You've just got to build systems to control it, right? To manage who you are, who we all are. Logic goes out the window, panic takes over. You have to get out before it gets worse. And some people, like me, as stubborn as I am, no, it's going to turn around. It's going to turn around. That's what I used to say. It's going to turn around. Absolutely going to turn. It's not turning around. Not when I think it is. And then by the time my account's pretty much wiped, then it turns around. And then I feel like, man, everything's against me. It's not against you. It's not against you. Second point around this one specifically. Media amplifies the fear, just like it amplifies greed. The first time I was able to fully comprehend this real time, and I've been investing since 2001, so 24 years, give or take. The first time I saw this real time was when Bill Ackman, during the height of COVID, so I guess it was in the late March, early April timeframe, he was on Twitter, he was on CNBC, he was putting out a lot of posts, he was doing a lot of interviews, just talking about how bad COVID was, what the government needed to do, how they were failing, how it was just like bad all the way around. This is Bill Ackman, right? Talking about it. All the while, like dumping this fear about COVID. And don't get me wrong, from a health standpoint, he was 100% accurate. But as it relates to the market, people bought into that. And he was buying the market at the bottom in late March and early April. He was buying the market and ultimately made so much money by encouraging and feeding the fan in the flames of this disaster that was COVID. He took advantage of it. When markets are dropping, what does the news focus on? Crashes, recessions, disasters. We've been talking about these recessions like nonstop for 5 years. And yet we're at all-time highs right now. And it's not to say that we haven't corrected and we haven't seen bear markets, but a full-on recession, I don't know that we've seen that yet. Not, and I go back and forth on what, constitutes a full-on recession. But we haven't seen it yet, and that's all they've stoked the fire, yet the market's at an all-time high. They're not trying to inform you. That's not what sells on the news. Even if you think about your local news, just watch 30 Minutes Tonight. I don't really watch the news, but watch 30 Minutes Tonight, and then I just want you to have, you can use your watch and your phone, and I want you to clock the amount of time that's spent on negativity, bad, fear, the worst thing that ever happened, just horrible news versus the positive. including the weather. I just want you to spend that time and understand the difference in feel good versus fear, bad, horrible. Just even on the local news. I'm not even talking CNBC. So media and social media amplify fear, and that sucks you into selling when you shouldn't. Panic selling creates permanent losses from temporary drops. Panic selling creates these incredible situations where someone is going to take advantage of you. And this is what kills me about that. This is what kills me about that. You'll hold on to a losing stock for months, just like I've done this. This is why I can speak to it, just to get to even. But the moment it drops 5% in a day, you panic and sell at the absolute worst price. You turn paper losses into real losses at the exact wrong time. Understanding the difference between a correction, a pullback versus a bear market on a particular stock is huge. Is huge. And being able to see where institutional investors are getting in. For example, this could be a moment for Apple. Like I talked about at the very beginning of this live, this could be a moment for Apple that institutional investors are already in place. We're going to find out in a few days, but they could already be in place. I've watched traders sell at 52-week lows only to watch it recover from that point forward. And like I said, if you stick around to the end, the stock that I'm going to cover, you're going to see you may have owned it at one point. This is why having a plan before you enter the trade is so important. And that 10-minute daily routine, if you get on it and you start doing it consistently over and over again, 30, 60, 90 days, 4 or 5 days a week, it'll change your life because it's your plan. Not my plan, not your coworker's plan, not CNBC. It's your plan. Because that 10-minute routine, I'm not sitting there with you. I'm not the same age as you. I haven't had the same experience as you. I don't look at risk the same way. I might be more conservative than you are, but this 10-minute daily routine, link in the comments, can help you get over that. All right, psychology trap number 3, and then we're going to get into that chart. And then again, as always, I welcome anyone. Drop a chart you want me to take a look at. Drop a chart you want me to take a look at. You have a question about. I always select one every live on Trading Truth Tuesday to cover, in addition to the one that I'm going to bring to you. All right, so be sure if you have one you want me to take a look at, go ahead and drop it in the comments. So psychology trap number 3. Copying others without understanding why. Copying others without understanding why. Now, again, every psychology trap that I've shared with you, every one of them, I've been a victim of. And victim is not the right word. I have succumbed to them. I have succumbed to all 3 of these. Copying others without understanding why. This psychology trap is the most dangerous, in my opinion, because it feels like you're being smart. And I'm going to tell you why. Because you have to learn from other people. And what I mean by that, whether you're listening on the news, you're reading a book like the books I have behind me, you don't necessarily learn in a vacuum. You weren't born knowing how to write, read, add, multiply, subtract. Someone had to teach you. You had to learn from someone. So when you're on the market and you're trading and you're about to get into something and you think you've learned, hey, I'm going to copy this strategy without understanding all the whys or the rules or the risk management or the emotions or whatever it is behind it, you feel like you're doing what you've always done your entire life. Yet you you don't fully understand all the mechanics, the systems behind why this person is doing it. And that's why this one is dangerous, because it absolutely follows exactly what you should do, which is why you're here today. You're learning about these psychology traps. Bringing these psychology traps to the forefront of your mind is going to help you manage them when they're happening. But how else are you going to learn them if you're not listening or following someone? And following gurus without understanding their strategy is super dangerous. Someone on YouTube says, I'm buying XYZ, not block necessarily. I'm buying ABC stock. So you buy into it, but you don't know their time frame. Like, how long do they plan to hold it? You don't know their risk management. You don't know their exit strategy or their account size in most cases. You're just copying the action without understanding the reasoning. So now this, if we go back to the school example and how you learned how to add, subtract, read, do all these things, right? In math, they would also say you got to show your work to get full credit to get the answer right, because you could literally be looking at your friend next to you and copying their answers without showing your work. And the teacher's goal was to make sure you understood how to do the math on your own. And so when you copy someone else's trade and you don't know their time frame, risk management, exit strategy, account size, or their risk tolerance, which is an emotional thing and it's unique to everyone, or where they're at in their trading journey, because where I was when I started at 22 years old is not where I'm at today. 20 something years later, it's not the same. Second point, social media creates false expertise. And I'm not saying everybody that's online sharing these nuggets and these wisdoms, some of which I've learned from, I'm not saying that they're false. I'm just saying what they're sharing based upon where they're at and what they're doing in their journey is false for you, because you haven't been on their journey. You don't know what they've been through. You don't know how they were raised and how they handle risk as opposed to you. I don't, if I lost $1,000 today, that affects me differently than someone next to me. It does. Think about it. I have friends, family that respond. We grew up in the same household and respond to a flat tire very differently than I respond to a flat tire on a car. Everybody's experience is different. So just because they screenshot this win, this result, or tell you, here's the trade I'm getting into, it could be false for you because you're a totally different person with a totally set of different experiences and exposure and education at this point that can make this trade go horrible for you and go great for them. Right? Drop a D in the comments if you've ever felt and experienced taking someone else's trade setup, entering it, and realizing, man, they're winning, I'm losing. I got out early, they got out later, or they got out early, I lost money, they made money. Have you ever experienced that? And that's what I mean by social media can create this false expertise for the end user. It could be true for them and false for you at the exact same time. The second point around this one, and this is why this thing is so dangerous and it's such a mind game. You can't follow someone else's system with your emotions. Their emotions are different than yours, I promise you, because every human being is created different. Different experience, exposure, and education. Different set of parents, different set of emotions, went to different schools, possibly a different age, different family dynamic, maybe married, maybe single. Who knows? But you can't follow someone else's system with your emotions. Everyone I coach, everyone I teach, I'm giving you the math, the work underneath. And then at that point, you've got to pull together the pieces that make sense for you and your emotions. My risk tolerance could be lower than yours, meaning you can take these things that I'm teaching you and then apply it to your risk tolerance. And maybe you trade totally different than me, but you understand the mechanics in the system. But you can't follow someone else's system with your emotions. Even if someone gives you the exact strategy, you won't be able to execute it the same way. Number one, you probably haven't back tested it. That's the first thing, to even understand where you should be trading it, what you should be trading it on, what time frame. There's too many variables. When they see a 10% drop, they might hold because they understand the setup. You see a 10% drop and you're like, I'm out. I'm cutting my losses. But then does that make their system and their strategy less effective? Or does it just mean that that's their system? And here's the hard truth: there are no shortcuts to developing your own trading judgment. That takes time. Again, you do need people to teach you. That's just inevitable. You need to read books, you need to learn what you're doing. But it takes time to develop your own trade judgment. Once you develop your system, you can actually begin to develop your own judgment. And you can't outsource this part of the process. You can't. They have algorithms out there, bots that can trade for you. But let's be clear, a bot has no emotions. It's literally going to fulfill conditions. And once those conditions are fulfilled, it executes the trade. So at that point, yes, a bot could work for you because you are not involved in the decision making. And again, if you want to learn for yourself, even how to manage your own bots and your algorithms, check out the 10-minute daily routine. It's free, it's a great resource. I want you to start working on your own routine. If I don't say it 100 times, I haven't done what I was put on this earth to do. You need your own way, you need your own approach. All right? So, that's the 3 psychological traps around buying high and selling low. Buying high and selling low. And I'm going to tell you that last one is, like I said, probably the most dangerous. So I'm going to check the comments real quick. I want to see if anybody dropped a symbol. I don't think I see any symbols. So I'm going to go ahead and get into the one I wanted to share with you today. And if I see one as I get through this chart, I'll be able to come back and yeah, we'll share. And then we're going to wrap up. All right. So let's switch to my chart view. And this was me when I was looking at NVIDIA. That's the drop. This is the drop that I was just telling you about. And then, like I said, came all the way down to about 87 and currently at 167. So almost double the price as of probably last week and early this week, definitely double on that price. So I hope no one gave it up at 88 to only realize this gain here after buying in the hundreds. So the stock I wanted to share with you today is one that I learned a valuable lesson on: set alerts. So I'm going to go to the monthly chart. And this is all the trading history. So from 2012 out to 2025. And I'm trying to remember, I don't believe we've seen a split. I'm just going back to double check. I don't believe we've seen a split on Facebook. I could be wrong, but I don't believe we've seen one. So from the beginning, where it started to where it is. All right. So this is the area that I'm going to key in on. All right. Now, I want you to go back if you have time, just so you can reinforce the lesson. And I'm going to mark the dates so you can see roughly about the time that the bad news started. So the bad news on Facebook, Meta, META, started around February 2022. February 2022. And it went on, frankly, till November 22 and probably a little bit further into 2023 before the sentiment changed. You had a negative earnings, followed by made, and then 3 consecutive negative earnings. And this one on February 23rd was also a negative earnings. And this is a monthly chart, but you had almost 4 positive months and then 5 that followed that negative earnings. So I'm going to grab one. I'm going to actually just put volume on the chart. I'm going to put just a basic volume note, not necessarily an indicator, just the volume. So as I zoom in, and again, these are your dates, February 2022 and November 2022. You can see this is the volume that sent in the month of February that sent it down on negative earnings. And then you can see a little bit more here around the October 22 negative earnings. And then the volume started to shift positive. So the thing I want you to go back and look at is try to find some of the articles where they were talking about Mark Zuckerberg, they were talking about Facebook and everything that was wrong with the company. I think at that time they were spending money on something that, gosh, what was it that they were spending money on that no one agreed with and wasn't working out? Can't remember what it was right now. And they were going to need to cut costs. They started letting people go. What were they spending money on? Man, somebody drop in the comments. I'm literally having a brain slump here because I'm trying to remember what they were spending money on because I don't right now. Does anybody remember what what they were spending money on at the time? It's not coming to me right off the top, but they were spending money on something from an innovation standpoint, and everybody's like they need to dial it back. They're spending too much money, all this jazz, right? And it went on for, honestly, I felt like a year, almost a year, if not longer, that this negativity, this negative sentiment existed. And I just want you to go back and check out the articles. It was an absolute bloodbath in the news. I mean, I think even some other CEOs were like, they were getting into like these little bro fights, if you will. um I want to say even Tim Cook and Mark kind of had a moment. It was just bad. I mean, it was bad. You would have thought they were going to remove Facebook and Instagram from the App Store. It was just horrible, right? That was the sentiment during this year drop. So I'm going to hit this little replay button real quick. Now, here, before all of this bad news happened, you had COVID, which looks like almost nothing on the chart, even though it just seems so bad. It looks like almost nothing on the chart. So the COVID high was here about 222. It pulled back to 138. And this is when everything was great. Everybody's at home, spending time online. Facebook is growing. People are blowing up their businesses on Facebook. Ad spend is incredible. And then we shot all the way up to 385, call it. And at this point, your fear of missing out was at an all-time high as it was running up. And most people would have thought at this price, it was going to the moon. There's no chance for me to get in. I just need to buy this because it's so great. And you can see price came all the way back to like, I think it ended up being like 80 something dollars, 83 maybe, that it came back to, all the way back. And at this point, everybody's still thinking like, oh, okay, it's dead now. But there were some people up here buying and trying to hold this stock as it fell. What do you think they did down here in order for this thing to make the next run up? What do you think? What do you think had to happen? Somebody had to sell their shares that they owned, some of which was retail investors that they owned here, in order for institutional investors to buy it. And you can see this consecutive volume that came into the market here as it started to climb. And this is when sentiment started to change for Facebook. And since then, we haven't necessarily heard anything bad about Facebook. It's literally continued on this tear. My question is, would you, with all that negative news, have bought Facebook down here? I was prepared to. I really wanted to get it at 138, 139. I would have purchased at 140 long term. However, I didn't have an alert set and I was focused on something else and missed it. And it literally has not come back. Has not come back. This is what happened after. So it broke the COVID low, dropped below that. That's how bad the sentiment was. But it was just enough for institutional investors to get in, sold you the bad news for you to get out of your shares, get out of your trades, for it then to take off. And let's just turn the replay off, to be at 703 today. So let's just do some quick math from the bottom. And again, I'm not one to say that you're going to get the bottom. That's not what I'm saying. But let's just say even from 115 to current price, that's 509%. That's a 509% increase on Facebook. Not even from the very low, but from 115. From the absolute low, looking at about 692%. Now, can you handle everybody beating up a stock? And the thing that called this one out, it's why Apple, I think, is potentially in a similar position, not even as bad from a sentiment standpoint, because the sentiment on Facebook at the time was horrible. But can you see this happen to a stock, hear all the bad news, and follow your strategy to buy? And the reason why I like the 138 price is because of the previous support. You had 2018, first trade war, March 2020, easy purchase here. Yep, it dropped another $50, but I would have been okay with it. I would have been okay with it. Can you see these setups with horrible sentiment and still make good decisions? And the reason why I still like Facebook is because, yeah, they needed to cut spending. They probably needed to back off that project that they were working on. I can't, for the life of me, check the comments again. I cannot remember the name of that project that they were investing so much money in that people wanted them to stop investing in. Oh, Metaverse. Thank you so much, Broderick. Thank you. Man, for the life of me, I could not remember Metaverse. Thank you. It was huge, and Mark was dumping a lot of money into the Metaverse. We're not talking about that nearly as much anymore, so he had to, cut it back. But let's keep it real. Amazon dumped a lot of money into a bunch of projects that failed. It didn't mean Amazon was failing. It was one project that he was heavily invested in. He's got to try some things to continue to grow the company. But even with all that going on, I didn't see a drop in people using Facebook or Instagram. It was still going up. And the way Facebook, Instagram, WhatsApp makes the majority of their money is through ad spend. And so as long as people are still there, eyeballs are still on screen in those apps, then people are still going to pay for ads to put their business, their product, their service in front of people. Now, if for some reason viewers or people stop using Facebook, Instagram, stop using the apps, then yes, ad spend could come down. But if that's how they're making all their money, okay, maybe I don't want him to invest the $90 billion or whatever it is in revenue, in a net income / profits into Metaverse. Maybe that's not what I want him to do, but he's still bringing in that ad revenue. That's what I could see. And this is just me giving you my thoughts at the time, right? And I probably have some videos I could pull out the archives from this exact time and say, well, everybody's still on Facebook to this day. Everybody's still on Instagram to this day. And no different than how everybody's still on YouTube. And even with AI and all the advancements with ChatGPT, Claude, and all these other AI platforms, people still go to YouTube, which therefore means that if people are still consuming on YouTube, ad spend is still there. Meaning people are still spending money to run their ads on YouTube. Therefore, Google still makes money. Can you sit back with your system and have that same thought process for yourself, independent of what's happening in the news, CNBC, your favorite investors, your favorite gurus, and social media? Can you have that same perspective that this is just a moment, right? Another one that I think sits in that bucket. I'm going to show you Apple because we talked about it. And I know Broderick mentioned it, so I'm going to go straight to his. The sentiment has not been good. Is this the same level of correction? I mean, it hasn't gone back to COVID necessarily, but it's a pretty solid correction for Apple, 35%, right? Bear market for Apple. It's at a support level. One of my support levels, 196, if you want to jot that down. I'm going to zoom in so you can see the the last kind of real negative volume monthly candle that brought it down to 160, 196. Or is that 168? Yeah, 168 was here in April. And since then, had a little bit of negativity from a volume standpoint in the month of May. And then a couple months of positive volume, right? I'm going to go down to the daily just so you can kind of see what the volume has looked like since this drop. And one of the things I think that's super interesting, and I'm on a daily chart, is that this green volume on Apple right here at the low was it was above the average. The green volume here, above average. So, not saying, because I have no idea where Apple's going to go. Earnings on the 31st will absolutely, we'll digest it as a market as to what it could mean and do we want to own it. But if I had to guess, this accumulation period since April, maybe even back as far as March, if it takes off, you're going to know and you're going to be able to look back at this period of time and say, yeah, that's when all the institutional investors got in. And the fact that it's making higher lows for me, so starting with April 2025, this was almost equal, then May 23rd, then June 18th, these are all higher lows, meaning that they're not even allowing the price to come back lower. Got an ascending triangle. So that's extra for you guys. Nobody necessarily asked for that, but I appreciate Broderick. I appreciate you in the comments helping with the metaverse, because when I tell you, I could not think of that investment for the life of me. So I appreciate you bringing that back into play, because I could not think of what he was dumping money into that no one, or at least after some months, people stopped liking. And I just think there was a combination of two things that happened with Meta. The overall market was correcting, and they just, was like, you need to get in your place, Mark. It's basically what I felt like they were trying to do, but the business was undeniable. So that's what I have for you guys today. We covered 3 psychological just traps that you can fall into as an investor and as a trader, with one of them being the most dangerous that we covered at the very end is copying what someone else is doing. You got fear of missing out, which is huge. These are all things that are steeped in your human nature that you can't avoid. You can't avoid, but you can learn to build systems, processes around being able to trade it and be profitable. Just try to avoid copying someone else's stuff without understanding why, when, how, what they're doing. All right. So that's what I have for you all today. Thanks for being here. Again, if you haven't already hit that like button and subscribe button, every Tuesday we're here. Unless I got something for some of you that already know me related to coaching, because I coach high school basketball. I'm here every Tuesday with you, just covering some of the psychological traps. And we're always going to have a chart that we're going to look at towards the end that'll help you understand what I'm talking about. My goal for you is to be able to overcome these hurdles by putting the things in place around your personal routine to be able to overcome, buy when you need to buy and sell when you need to sell based upon your routine. So don't forget to grab that free resource, the 10-minute daily routine. The link's in the description if you're watching on the rewatch. And if you're here with me live, I appreciate you being here with me. You can see it in the comments as well. So until next week, I will see you guys. Stay disciplined. Have a good one.